Good morning, traders. It's 8 a.m. Chicago time on Friday, the 10th of December. Happy Friday, everyone. Um, Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2133. This morning, we have mild risk on as we break away after the CPI numbers this morning came in. Overall, the report shows that inflation came in, year on year, inflation came in slightly better than forecast. The forecast was 6.9, consensus 6.8, came in at 6.8. Inflation month on month came in at 0.8 versus 0.8 forecast, 0.7 consensus. Core inflation also came in line at 0.5. And then Great Britain reported its GDP year on year as of October came in at 4.6, missing the forecast by 50 basis points. The forecast was 5.1%. Balance of trade slightly better in Great Britain. Month on month GDP is also weaker, 0.1% versus 0.4. Looking ahead at the day, again, it's risk on since then. It has been somewhat risk on the entire session, though. The White House warned that the numbers could be a lot higher than expected. The market was expecting worse, and the numbers came out in line, which is good in this situation. So that's where we stand in terms of, so that's the inflation piece, the GDP piece for Great Britain, and then we still have the roll in full effect here. I talked about it a little bit yesterday, and I'm going to warn you again that today is probably one of the worst days to trade in the quarter historically. Generally, this day with option expiration, weekly option expiration, is not great risk reward. There's going to be a lot of roll activity. The roll numbers go vertical, a little more vertical. So that represents the open interest shifting into the next contract, into the March contract. I'm continuing to trade, and a quote, the December contract, and we'll do the roll and the level adjustments and equalize everything to the next contract over the weekend. So convergent members, your stock zones, master levels, and so on continue to represent December, and they will represent March starting this weekend. So just be aware of that. Looking ahead, what's left in terms of economic releases, Michigan consumer sentiment prelim. This is a mover. This is a high impact number. Expected at the forecast is 67. Look for that at 10 a.m. And then the monthly budget statement, which isn't generally a mover. We're expecting a $190 billion deficit. The prior is $165 billion. We're spending like money don't mean a thing, as they say. No significant earnings. The S&P has a multi-distribution profile, currently 145,000 contracts, so in line with the last couple of days. Still in a huge balance zone, very choppy. As we talked about yesterday, we came into the session saying, beware, it's likely to be very choppy, and it was very choppy. Very tough day to trade yesterday. I think I only saw one setup that I could kind of take, legit setup that I could take. It was an outside in type of trade. You want to fade edges, but it wasn't my thing yesterday. The overnight inventory, 95% long, so 95% of the volume traded above the settlement price. We do expect that there's likely to be a small pullback versus yesterday. We're opening in a gap versus yesterday as well, so keep an eye out for that. The range so far is 42.25 points, which is higher than what we had yesterday in the pre-market session. And the point of control is at 47.0150 in the overnight session. It's shifted up from, let me look at my levels. It's shifted up from 46.7350, so below the 46.85. Remember, the key areas below 46.90, 85.80, and then 73 and a half. These areas are quite difficult to trade. Looking at just jumping right into the review segment, looking at what we did yesterday, this is just a one tick by 8 PNF. I just don't want to change back and forth right now, but you can see there's quite a bit of chop here, a lot of spike, consolidate, spike lower, immediately spike higher, put in a bear flag, continue lower, continue lower, continue lower, and then take it all the way back. Very choppy. A nice little tag of the mid. I did not expect that mid tag to hold at the end of the day at 80.50 for continuation lower. That was, to me, that seemed like a lower probability. It looked to me like we are likely to have an extreme again, although we broke away from the prior 2 days ranges. The expectation here is that it would poke underneath 71.75 and go right back in. And that's what it looked like to me, but it ended up holding, and we ended up closing on a neutral extreme down. So we have a neutral extreme up the prior day and a neutral extreme down yesterday. Neutral extreme generally describes a strong reversal, and generally we would expect these kinds of days when seen at the high. A neutral extreme down day at the high, for example, really represents a market that is likely to continue lower over the next couple of days. Even in the composite, the structure, we put in a market structure high. It's very clean, very clear. But this morning we're trading way up here. We pushed as high as 47.0650 in the overnight session. So that's it's just pretty choppy, and we understand why, and that's because we're in this high balance, high volume balance area here, and there's incentive for both sides to kind of ping pong this thing around. Looking at what we've done since the reopen. Let me switch to a 30-minute here just to keep it clean. We've basically just sat sideways. There wasn't much news out of China on the real estate. There is some indication of supportive action or an easing action from the Chinese government, which is relatively positive given the state of their real estate market over there. But we broke through on the European Open, pulled back, and now we took off for the inflation numbers, and we're holding basically a multi-distribution profile, and we're holding the top of the range. In my view, this is very likely to move back towards 90 before it goes any higher. But it is roll, and it is very difficult to predict what this thing is going to do and what the open interest is likely to need to accomplish today to roll their contracts forward. So proceed with caution. Of course, mind your delta. The delta doesn't mean very much. It won't mean much until Wednesday. It'll be very, very contaminated by the contract roll from December to March. So be careful how you view that. Let's take a look at the composite. Here's the market structure high, with not yesterday, but the day before that, having this prime bar, 47.03 quarter. Now, we broke through that in the overnight session, and we are above yesterday's range. Left to its own devices, this was very likely to creep down and fill in the gap, potentially test this lower distribution here at 78, test this 78.80 area. That's how it was set up yesterday when we finished. This is kind of a high probability outcome, in my opinion, but it's disrupted by the news as we have it. So we'll see what it does. The market's trading above yesterday's high. But if it becomes responsive and gets back into that range, especially if it pushes down through the 46.85, to me, this is very likely to be bearish and to run down, which could give us a pretty decent opportunity. But this morning, I don't plan to trade. I don't plan to trade much, at least. Things have to be really, really clear. A setup would almost have to slap me in the face in order for me to participate. It's just, my numbers historically are just very poor on this day. So there's no sense in me trying to swim against the tide here. So that's that. We are right on top of the MC, the new MC point of control up here. Just be aware that we are in this big bounce zone, and that's the biggest thing I'd like you to take away from this today. Looking at the overview, just real quick, and then we'll wrap up. We still have pretty good separation. We see the VWAP turning up for December. We're on our 10th day. We see the VWAP turning up, and we see that price is actually bullish against it. So I'm expecting new all-time highs over the next week. With the rolling expiration, who knows what's going to happen here. But really, this is holding steady. This is quite bullish action so far. Given that we put in a high yesterday, I expected a pullback into these lower prices, the 56 or so, and then for it to turn back up. But it looks like it's not willing to give that up just yet. The Dow also showing a lot of strength and separation from VWAP. The NASDAQ, although it popped a little bit higher yesterday before it came off, is actually relatively weak. You can see the NASDAQ's not getting very much separation from the beginning of the month on a relative basis. And the Russell has pulled back to its monthly VWAP and bounced right off of it. The rest, crude is trying to stage that rally. Remember, we expected a rally into 74, 75, 75 even, and it's still setting up to do that, it appears. Crude has been, it's quite a drop in crude overnight. Crude has been trading very systematically, pretty decent auction in crude there. You might want to take a look at it on Fairx as under the symbol oil, OIL on Fairx, or trade the MCL, which is a lot more expensive to trade, but it's also a micro. I think it's a pretty decent product when things are very, very quiet in the ES or in the indices in general. Again, it's not suitable for all investors, but that's a pretty good place to go in order to find something that is more has structure and is actually moving. Let's take a look at what's expected for today. I want to remind you all that this fundraiser is still running under EdgeClear for St. Jude's Children's Hospital. All proceeds from profits for the month of December at EdgeClear are going to be 100% donated to St. Jude to support children with cancer. 100% of commissions minus fees, of course. We have to pay the fees out, but if you want to donate directly, you can do that at myed.ge/St. Jude, myedge/St. Jude. Please participate if you can. Here's what we're looking at for today. So let's get down to 2 Vol Sigma, although not really expecting it to go that far. But you could see that we're holding tight. Wrong color. You can see that we're holding tight to balance here. Full session. I've got these full session profiles, and you can see, boom, 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 and now we're shifting the point of control higher. This thing has been in a pretty wicked bounce. This is the area from which we sold off, 4707.75 being the SOC of the Omicron. COVID announcement, and we are trying to break away. So we've been making this kind of bull flag following the rally. We've been in this bull flag, and it looks like today we are likely to run up. So yesterday we had an opportunity to run up. We finished weak, so I expected it to continue to run down this this downward trend, and then eventually break and go for the all-time high being 47.40.50 in the December contract. This morning, what are we expecting for this morning? Let's take a look. What are we expecting for this morning? Open auction out of range, looking for it to be responsive down into the 46.90, right down here, 90, 46.90, expecting it to build a base between 46.90 and 46.80, somewhere in here, to turn back up, come back to the overnight point of control, and squeeze that overnight high, looking for a push into 15, the next key area up. 15, and at this point, once we get to 15, 20 becomes the range becomes quite stretched, and we start to expand or stretch the daily range statistics. So the probabilities of a long carrying at those high prices are relatively low. So again, looking for 90 to 85 up here, 90 to 85 for a push to 15 and 20 at that point. Okay, the secondary is the opposite. The secondary is that the sellers that came in at the close yesterday come in again. So we push this high. We push through the 47.0650, get to 07.08, and then we get an impulse down. If we get an impulse down, I'm immediately going to look for a short wherever that shows up and look for a push. And in this situation, the target really becomes this 46.66 settlement price. Let me see. 46.67 settlement price becomes the key target. This is likely to catch a lot of people by surprise, a lot of positions by surprise, and might accelerate down the same way we saw yesterday, how this accelerated down like that. So these are the two main scenarios. We're opening in balance out of the prior day's range. It's likely to be turbulent, and it's really a great day not to trade, to be honest with you. So consider that, weigh that in, and hopefully you'll get ahead today. If not, if you don't trade, it's great because you get to come back on Monday and trade again. Again, the roll will be in effect, is in effect, and it's likely to impact us most. Today, a little bit less Monday, a little bit less Tuesday, and Wednesday we expect the trade to come back to pretty much normal. And then we have expiration Friday, next Friday. Good luck.